I'm Mark Gagan, and you're listening to a special episode of the Voice of Insurance podcast, produced in association with Recorder. I often wonder if we in the insurance industry have any idea how lucky we are that there are so many smart people out there looking to help make the way we do business easier, more efficient, more productive, and ultimately more profitable. Today's guest, Matt Hicks, is one of these people. Matt is the co-founder of Recorder, a next-generation broker management system that connects producers directly with underwriters and gives those underwriters instant quote and bind capabilities. Matt is a serial entrepreneur who has already been involved in 2 successful fintech ventures and now has some very well-known insurance investors on board this one. The product Matt and his team have produced is laser-focused on what adds the most value in the commercial insurance value chain. It's all about reducing admin and freeing producers, whether they're brokers, coverholders or frontline underwriters, up to do what they do best. The initial productivity gains claimed are eye-opening. The term serial entrepreneur may give you a misleading impression, so I'd say the best way of describing Matt would be that he would always be the most investable guest on any episode of Dragon's Den or Shark Tank. I think by the time he'd finished with them, he would have all the investors fighting to be involved. The key, I think, is that special humility and empathy you get with really successful entrepreneurs. In my time as an insurance journalist, I've lost count of the number of entrepreneurs I've met with who have undoubtedly superb technology, but who ultimately failed because they had zero empathy or understanding of how insurance professionals actually work, and therefore what help they really need. Matt and his team are in insurance for the long run, and know that the sort of API-led revolution they're proposing will take time. But at the same time, they know that history is on their side if they're patient enough. So I can highly recommend a listen. Matt is incredibly easy to talk to, and his experienced and down-to-earth approach means he knows exactly how to go about making Recorder the sort of tool that over time the best producers are going to be clamouring for. Enjoy the podcast. Matt, welcome to the Voice of Insurance.
Thanks for having me on, Mark, and congrats on the success with the podcast.
Well, you're going to tell me all about Recorder, and I can hopefully give you mutual congratulations about Recorder. But before you do that, why don't you introduce yourself to anyone who's listening who doesn't know you? Run us through your career.
Of course. So I graduated in 2007 with a degree in computer science. I think it's safe to say I'm the least technical person at Recorder by considerable margin. I've spent most of my career in market-facing roles. My first foray into insurance was back in 2011 when I worked for Allianz Trade, which was known as Euler Hermes at the time.
Yep.
And after the initial excitement of working on the 36th floor of One Canada Square had wore off, I became frustrated at the pace things were moving and the lack of high-quality software. So I decided to join what was at the time the first wave of fintech startups in London. It was a company I joined called Market Invoice, which was set up by some ex-Lehman bankers. And they were leveraging modern technology to make the process of business lending more flexible relative to the facilities that were provided by banks at the time. And it was at Market Invoice where I met my Recorder co-founders. So it was all those years ago where we met. I don't think we would have met outside of that setting because we're very different people and we have very complementary skill sets, which is hugely important if you're thinking about setting up a technology startup, which is often why startups give birth to other startups, because these groups of people with complementary skill sets have the opportunity to socialize and meet in that setting.
Yeah, because you get a kind of crew together.
Exactly.
Yeah.
So Dave is a CTO. He's been writing code since he was a child. Alex is very focused on the operational and finance side, and I'm on the go-to-market
It's a bit
side.
like, a friend of mine works in film. He's the director, but he always uses the same sound person and always uses the same camera people because he just knows what he's going to get. And so he doesn't book that job until they're available. It's just one of these things, but they're all freelancers. But it's that same kind of idea. So you found your coder.
Exactly. And I think if you're somebody who's been in insurance for a long time and you're thinking about how you can make a move in insurtech, you've got to work out how you're going to come into proximity with talented developers, basically. And I would recommend the best way of doing that is going and working at an insurtech because they should be
You're rubbing shoulders with them, literally, aren't you?
Exactly. There should be a rich base of talent within good insurance.
So how long did that business last?
So that business is still trading. It's doing pretty well. We spent a couple of good years there. And then...
Is that kind of factoring invoices?
Exactly.
Yeah.
So it was a platform that enabled small businesses to trade individual invoices with at the time, a network of high net worth investors. So it was kind of cutting the bank out altogether. And it was much more flexible than what the banks provided. Banks would insist that you factored the entirety of
It's
your...
like all or nothing, isn't it?
Exactly. It's a bit like credit insurance in some ways because they don't want to cherry pick the risk. So, that business is still trading. It's doing some other stuff now. But Alex, Dave and I went off and did various other things, working for high growth, VC-funded fintech startups. I think once you've got the bug of working in a high-paced environment like that, it's difficult then to transition back to a large corporate. And it was in 2017 when we got back together and took the plunge and started our first company together. And that was a company called Codat, which was basically building financial data infrastructure, mostly servicing banks and lenders. But what Codat did was enabled the financial institution to connect with their small businesses accounting system. So let's say a small business is using Xero or Sage or QuickBooks. Rather than downloading information from that software, sending it to the bank.
So you have a sort of API straight through.
Exactly. So an API that straight through processed the data, standardized it so that it was useful, so that a bank could give an agreement in principle to lend to a company within a day rather than taking 6 weeks to make the decision. So Codat exploded during the pandemic because there was all of those kind of loan programs which were backed by government guarantees. So we ended up working with all of the major banks, and the company expanded very quickly. We raised over £100 million from investors like PayPal, Amex, and Index Ventures. And we added over 300 employees at its peak. And we ended up partially selling our stake in that business in 2023 to JP Morgan. And we decided that we wanted to go back to building something from scratch. And we founded Recorder in February of 2024 after doing some extensive market research on how can we use a similar concept to Codat, which is an API data infrastructure, to make insurance more frictionless. So connecting insurers with brokers so that they could trade more seamlessly, basically. So lots of the similar principles and learnings from Codat, but applied to a new industry.
So we're bang up to date. How did you get that idea, though? Was it back from your credit insurance days?
Yeah, partially. I think it was partially, we had some insurance clients at Codat. We worked with Beazley, Aviva. We worked with Amazon on some of their product liability insurance. And they liked Codat for the same reason the banks liked it, which is you could get this up-to-date financial information on a small business, which is famously difficult because when you're beneath 10 million turnover or 50 staff or 5 million in assets, you don't need to file audited statements with Companies House, so very little information available. So you generally have to ask a company to volunteer their turnover information as an insurer. But we observed something peculiar with our insurance clients, which they were getting far lower adoption rates in terms of getting businesses to actually connect their data than a lot of the other clients that we had. And when we looked at this a little bit more closely, we realized that it was fairly obvious the value exchange was not there, i.e. the insurance companies were asking businesses to connect their data after the policy had been issued.
And you say, why? Why would I bother?
Exactly. There's no incentive for me to share quite sensitive data for you to help manage your risk better. So we quickly sort of moved on from some of those relationships. We said, well, where would this information be most valuable? And we said, well, it's going to be the brokers, because the brokers are the ones who are moving those clients around and making sure they've got the tailored cover they need. So we spoke to brokers and they loved it, but they said, how do we consume an API? And it became obvious to us at the time that they weren't in a position to consume APIs into their current broker management systems for a number of different reasons. So that was the aha moment. That was probably back in 2021, 2022. And that idea came into our head at the time. And it was only in 2023, really, where we'd said, hey, we should go and attack this market. It's a huge market. London still leads the world from an insurance perspective, but maybe is starting to lose its edge because it's not innovating as quickly as it should do in regards to building API infrastructure to enable the seamless transfer of data between brokers and carriers.
So the problem you're solving is this inefficiency, this inherent inefficiency that the broker has in their trading relationships with all those insurers.
Exactly. And it's been a really interesting journey so far. One thing I would say is that people in insurance are very friendly relative to some of the folks that we met in the banking industry. So people are generally very open. But as you can imagine, people are risk averse and nobody wants to be the first So we have the classic chicken and egg problem where we need to onboard insurers who are willing to allow people to trade with them via API and Recorders platform. And then we need brokers who have the premium flows. And you are constantly playing this game of making sure you've got enough insurers on the platform to place business with. But yeah, fortunately, the two-sided marketplace is a problem that has been solved in lots of other startups. And basically, the way to solve that problem is trying to own a specific niche of business. And we've decided that that would be financial lines or the specialty business for us, where actually, because a lot of the products are more nascent, for example, cyber insurance, hasn't been around for as long as lots of other product lines. So actually, we found that within cyber, there is actually a lot more API enabled products. So there is more places for us to connect to. So yeah, we have a cyber product with coverage across most of the major carriers now. And so we've proved the concept within cyber, and now we're expanding to PI, D&O, property. And the goal really for Recorder is to be product agnostic, insurer agnostic, broker agnostic. We want to be neutral. We want to be Switzerland in a way. We're building infrastructure that enables people to trade more efficiently. A bit like when the telephone exchange came around, before the telephone exchange.
First you say, but who can I phone? No one else I know who's actually got one.
Exactly. And people were building lines to each other at a huge expense. But then the telephone exchange came along and they could connect your call for a fraction of the cost of you building those telephone lines yourself. So that's a very similar analogy to what we're trying to do.
Absolutely. So you're really connecting businesses. So it's just a straight look through. So the underwriter can look immediately through at what the broker's got.
Yeah.
And the broker can immediately see what the underwriter is offering them.
Yeah, exactly. For the brokers and insurers, nothing really changes. They're still engaging with the client in the same way, getting them to share their risk information. But there's a translation layer where we convert that risk information into a JSON, which is a format which can be exchanged easily with other parties. And then that can be consumed by the insurer. And then we can carry out all kinds of operations like quoting, referral handling, document generation, binding. So there's lots of complexity under the hood. But from the broker's perspective, actually, what this gives them is a system that enables them to deliver a better customer service.
And so it's already there. If I want to show this to BZ, I just now press a button and lo and behold, BZ can now see this thing because it's already in my system. And effectively, if it's in my system, it's in their system.
Exactly. Without a human being have to go and key all that information into.
You're not going to attach this thing to an email, thank goodness. You could do if you wanted.
Yeah, well, I think the more complex the risk and the larger the premium, the more likely it is to be traded via documents, because the juice is worth the squeeze, as it were. Like, people are happy to process paperwork when there's 100k premium on the line. But when the premium is low and it's 5,000 or 2,000, then it becomes unprofitable for human beings to be processing this information. That being said, I think what we've seen with the insurers is they are increasing their appetite for API-based trading. So we have insurers who support API-based trading for businesses up to 100 million in turnover, in some cases 250 million. So this is far from being a micro SME thing. This is, I would say, most appropriate for the commercial mid-market, where things are broked largely manually, either via market presentations or where people are keying the same information into multiple insurers' portals, which is obviously a hugely inefficient waste of time.
Say, I'm a broker and you're sort of pitching your idea to me. How do you describe the business? So is it a placing system, or how do you explain to them exactly what it is so that they can walk away straight away in the sort of short version so they can understand exactly what it is you do?
Yeah, we describe Recorder as an operating system for commercial insurance brokers. So we want it to be the first tab that a producer opens in their browser when they go to work in the morning, because it will show them what renewals they have coming up, which clients have made a submission to them, which insurers have come back with a revised quote based on a request you made yesterday. So it's really that system of work rather than a system of record, because I think there's lots of great system of records that have been around in the market for a long time, which are fantastic at enabling brokers to stay compliant, and they can key all their information into that system of record to make sure that their operations and finance team can report to the regulator or to whoever they need to report to in a compliant manner. But I think what's been forgotten is that the majority of people at insurance brokers are producers. i.e. they are speaking to clients every day on the phone, or their handlers who are supporting those producers to move data around to these various systems, or increasingly they're underwriters, where the underwriting authority has been delegated to them by the capacity provider, and actually they've got an underwriting work desk, which is where they're moving cases through the various processes they need to facilitate premium on that binder. So we're doing a combination of all those things.
So you can do both, right?
Yeah, exactly. So the risk information, as long as it's being captured at the top of the funnel in a structured format, i.e. it's being captured digitally rather than being on a document or they've had a conversation, it's being keyed in, that means that you have a lot more flexibility with what you do downstream. If it fits into one of your binders, it can go directly through and be quote and bound via a binder. If it needs to go into a particular facility that you have, you can do that. Or if it needs to go off to a wholesale broker because you don't have the capability to place it yourself, we can also do that as well. And it's the capturing the structured data at the top of the funnel, which is the key piece. And one of the things which has really resonated in the market that we've helped, how do brokers transition from this largely analog world to this digital world? Well, we've implemented one of the most useful applications of AI we've implemented within Recorder is using AI to get data from proposal forms or existing policy schedules and using that as a mechanism to power what we call a smart renewal. So we take the information from the previous year's proposal form, we populate that into an online proposal form, and then the broker just sends a link to the client saying, hey, can you refresh the information we need for this year, your financials, your work splits, whatever it is, and just confirm that the rest of the data is static and is consistent with the previous year with an e-signature to mitigate E&O risk.
It's still got the same name and address as,
yeah,
as
exactly,
you had before, right?
and that converts a renewal, which might have taken 2 or 3 weeks of a CFO's time, into a couple of days process. And if you're that CFO, I know which broker I'm going to work with. It's the one that gives me back the thing I can never make more of, which is time.
Yes, as we know in all our daily lives, every time you interact with a company that you know is not as well joined together as you thought it should be, it's so miserable, particularly being passed from one department to another, and you have to restate exactly everything you've told the person before, and they're not connected.
Exactly. If they're sending you a blank proposal form at renewal, that's just not a very thoughtful.
It's just dumb, isn't it?
Yeah, they're just not respecting your time. And one of the bits of feedback we've had from brokers on this functionality is that it works just as well for clients that aren't yours. So if you're pitching a client and you're attempting to get appointed to that client, as long as you can get their renewal date and the existing proposal form, it will work just as well. So you can actually use it to...
So you can do a lot of pre-populating.
Exactly.
It's one of the use cases of AI that is starting to emerge, actually, is this in production.
Yeah, exactly. Yeah, there's a huge amount of hype in insurance about AI. And one of the responsibilities we have to our clients is like, hey, we'll be the filter. So at any one time, Recorder's development team will be spending 10% of the time working on moonshot ideas where we're playing with the latest LLMs to work out, right, is there enough compute power here to solve this problem and to make this use case viable in production? And then we battle test it either with some friendly clients or ourselves internally. And only when we've battle tested it and proved there is value creation will we release it into production, so that it's never a POC that we're getting our clients to test for us. We know that it's going to be useful. We know that it's going to give the client a better experience, or it's going to save the producer time. One of those two things generally. That's when we'll push it out to market. But yeah, I can imagine as the CEO or the MD of an insurance broker, trying to keep up with what's going on in AI must be tiring because it's just moving so quickly. And what we say to our clients when they sign up is like, look, we'll keep on top of all the latest developments. And when we've got a killer application or a killer use case, we'll run it by you or we'll update you in our...
We just include it in the next version.
Exactly. And that's resonated really well because not only are you giving them access to the latest technology, you're also saving them the bother of having to try and keep up with this thing which is moving at lightning speed.
There's so many horses in this race, and how do you know which one to back and which one's the Betamax and which one's the VHS? I mean, it's very difficult for anyone to know. It's not your core competency. Your core competency is providing insurance coverage for people.
Yeah, exactly.
Oh, by the way, POC is proof of concept.
Proof of concept.
So it's my job to get rid of any three-letter abbreviations, TLAs. How big's the business got?
We've been going about 18 months now. We've largely been in R&D mode where we've been listening intently to feedback from clients to try and build the best.
You've been building this strong position within cyber.
Just build the best products we possibly can, both in open market broking, which has been largely in cyber, D&O and PI, but also The fastest growing area of our business is in delegated authority, so supporting brokers with binders and facilities, which I think is a huge growing area. I think a large part of the double-digit growth we see in the UK insurance industry is being contributed by DA because it enables the insurance industry to address niches which are too fiddly for the primary insurers to address themselves directly. So an MGA steps in to fill that customer need. So I think a lot of the growth in the market is coming from either MGAs or brokers with DA. So there was a strong pull from the market for us to build a modern software solution to support both brokers and insurers with that. And I guess the power of having structured data captured in real time is the insurer can actually interrogate their exposure in real time. So rather than having this situation where a broker is sending you a bordereau 10 days late at the end of every month, and you kind of have a photograph of your exposure on a monthly basis, what you can do is every time a risk is bound, that data is then recorded into that real-time bordereau, if you like, or that living bordereau.
Just look.
So, well, even better, you can create alerts to say, okay, if I have risk assets with exposure in this space, I just need to raise a flag to my risk folks to say, hey, on this binder, we now have potential.
Here's another Thames Valley potential flood zone.
Exactly. So it becomes more automated. And certainly the more aggressive capacity providers we've spoken to think this is marvelous. And, I don't think we're at a stage where they're mandating their BA partners to use a system of this nature, but they're certainly strongly recommending.
Well, I suppose you come to the next renewal. So some of the other people I'm backing are using something much smarter than what you're using. Are you kind of getting on board with this thing? This is the way the market's going. So, if you want to keep up with the Joneses.
Exactly. And I think insurers being more aggressive with their capacity and potentially even their work transfer commissions, because the main issue that we hear from insurers on DA is discipline. So it's making sure that the underwriting guide is being followed. And whenever they have issues, it's because they look at it and someone's bent the rules, or there's been some cases written that shouldn't have been written. And the thing which they really like about this is they're basically taking their underwriting guide and rater, and we're taking the business logic from those documents and putting it into a programmatic workflow. So it's very difficult to break the rules, unless you're a fraudster, of course, because the logic is baked into the platform. So in that scenario where you have business logic from the underwriting guide baked into software and a real-time bordereau to monitor exposure, if you're a capacity provider, you can be a lot more aggressive about how you distribute that capital. And I think people will then be just like, which brokers or which MGAs have expertise that I don't have internally? And that's how you should be selecting who to work with and which market segments you want to address, because you've got these guardrails both at the front end to help you ensure that the discipline is there, and on the back end to monitor exposure because you've got a real-time bordereau.
Yes, because there's no excuse. If you can see what's happening pretty much in real time, then it's kind of more for you as well. I mean, if you're not monitoring it, then, whereas back in the old days, you only had a quarterly bordereau, not even monthly, quarterly, and you just had one line. It just said this. It's only when there's a hurricane in Florida that you find out that your binder's written a ton of it. You thought they were a Texas binder, but it turns out they wrote a load of Florida because you didn't really have any control over all this stuff. You may have had some rules and whatever, but you weren't aware of it until the claim came in.
Exactly.
You could see the premium, but it wasn't very clear that it was a Texas headquartered company but it happened to have tons of warehouses on the beachfront somewhere.
Yeah, exactly. And then I think from a risk underwriting and actuary perspective, it's like, how can we interrogate this real-time bordereau data in order to ensure that we're as profitable as possible, basically.
In terms of when you were getting the business off the ground, you'd have the successful exit, so it sounded like you could fund this thing yourself.
Yes, so we're very fortunate that we're second-time entrepreneurs, so we're able to move quickly and avoid some of the early mistakes that we made last time around. We financed the business ourselves, at least for the seed stage, but we've recently taken external capital from some business angels, mainly because of their domain expertise. So Dave Walsh and Graham Newman, who founded CFC, recently joined the cap table. And it wasn't necessarily that we needed the capital. It was more that we wanted their guidance and expertise.
A moment in Dragon's Den when they think, yes, I don't really care about the financial terms of this deal. I want you, the dragon, to come and help me.
Exactly that. And I think they've been amazing, helping us to test hypotheses that we have and helping us to understand how the broker market works. Because I think one of the benefits of maybe not having lifelong careers in insurance is we can think critically about some of the problems we're trying to address without being encumbered by legacy and how things have been done historically. However, I think you still need a steer on why things work in a certain way, and you can't be those guys who just come in and say, "Oh, we're going to change the game."
I'd commend you. That's a really good correlation, because I've known those two for quite a long time, and they've always been into this. They would have been into this 20 years ago when I first met them. They'd always tried to automate as much of the proposal, as much as the kind of grunt of doing that business as possible. They're culturally totally aligned with you on that. And of course, something like cyber, they do know rather a lot about it. How many people do you employ?
Yeah, so we're 14 now. We've got a number of different roles across the business open. So we've built some strong momentum. I expect we'll be closer to 20 or 25 by the end of the year. We've got about 15 insurers signed up with commercial agreements to trade with them electronically via either API or hosted products. And we've just passed the 50 broker mark. So we're pretty happy with where we've got to in the first 18 months. And I think we're now planning how do we scale this?
Can you estimate how much premium's been put through?
I would say if everything continues to go well, we should be over 100 million by the end of this year.
That's not at all insignificant. And how do you fund yourselves? And what's your business model in terms of how do you charge?
Yeah, so we're software as a service. So Recorder is accessed via a web browser, so it's entirely hosted in the
license
cloud.
fees.
Yeah, exactly. So for brokers, it's pretty standard seat-based license fees. So the number of users you have will directly correlate to the fees you pay. For delegated authority, it's slightly different because it really depends on the complexity of that product or scheme that you're trying to build. Is it multi-section? Is it multi-market? So that will range from anything between, 10 grand at the bottom end, all the way up to 100K for the most complex schemes. And then on the insurer side, we take a usage fee, which is typically based on either originated premium or bound premium, which is basically if a quote has been originated via the Recorder platform and then goes on to bind either on Recorder or off Recorder, we'll get a small percentage of that premium. Important to say, though, we're not a regulated firm. We're not a wholesale broker or anything of that nature. We're a software company that moves data that represents the financial transaction.
So, yeah, you don't have to go and get a license from the FCA, do you?
Exactly. So whilst we express some of our fees as a percentage of the premium, it is not a commission, because a commission, as defined under the FCA, would mean that we're an intermediary, which we're not.
Right. And we've kind of touched on this, but there's usually an ideal size broker that you'd be targeting, a sort of Goldilocks. One's too small, the other's too big, because we all know the big three, big five, they've got their own development plans for these kind of things. There's probably somewhere in the middle. Is that the right way of thinking at it?
100%. Yeah, we define it ICP, or our ideal customer profile, as like mid-market, high growth, independent brokers. And they make up the bulk of our clients today. So just to give you an idea of the profile, it might be somebody who has worked at one of the big firms previously. They've got disillusioned with the lack of good quality technology available to them and the convoluted, over-regulated processes. And they've gone and set up on their own to address a market need, which they know that their large incumbent employer was failing to meet. So some of these guys are 5 million premium in their first year, 10 million premium in their second year. And it's really exciting to work with them because they've got the contacts, they've got the insurance know-how, and we give them the technology to kind of supercharge the amount of premium each producer they employ can write. Because that's really what Recorder comes down to. The way we will like our clients to measure the performance of their relationship with us is income per full-time employee, or GWP per producer. And in some cases, with some of our clients, I think, we've doubled the forecasted income per full-time employee, merely because we're taking all of the heavy lifting away from those producers. So they're no longer rekeying information. They're no longer having to manually collect risk information from clients. They can use slick digital forms. And increasingly, I think with private equity owning huge parts of the insurance broking industry, that efficiency metric of income per full-time employee is really how brokers are measured these days.
There's still more carriers to go and fish for, I would have thought. In terms of your business model, is it the speed at which you can expand? Is it really limited by the appetite that those carriers have to properly digitize? If I spoke to any of their CEOs, they'd all say they really want to do this. They'd take their sweet time about it a lot of the time.
Yeah, I think we've come to terms with the fact that insurance companies are not fast moving. There is no compelling reason for them to be first and to be the guys who spend an extraordinary amount of capital expenditure on trying to win in this space. So I think they're all watching each other. But if you look at the fastest growing companies, CFC would be a great example. They have API enabled products and they distribute those API enabled products via a number of different platforms, including Recorder. And I think denying that is the way that the market is going is wrong. So it really depends on whether they want to be last to that party. But yeah, insurance moves slowly. And I think we're very cautious about the kind of capital we use to finance our business, because when you take capital from a venture fund, there is an expectation on the horizon over which you return that investment. And I think
they're phoning up every morning and say, "Have you exploded with growth yet this morning?" Because
exactly, and they've got their own LPs and investors to report to. So we're very cautious about whether that mixes well with the speed at which the insurance industry moves. So what we're trying to do is work with investors and advisors who are patient and can provide us with not just capital, but advice and, importantly, introductions to the people who are actually going to make things happen.
And you've already mentioned that you're starting to find your feet within cyber and financial institutions and financial lines. Is there anything inherent about those lines that lends themselves to this form of trading? Or is it really you could trade using this method with almost anything? Do you think there's some classes where there might just be an edge or that the brokers in this class are just more tech savvy?
I think one of the things I've observed is that financial lines, the highest conversion rates we see within financial lines is when there is an affinity partner or a sponsor. So an example of that might be the National Institute for Law Firms or the advisory organization for accounting firms. When they put together a program of insurance, it might be PI or it might be cyber, they've built it for their members.
Yeah.
And then they are the ones who are promoting that facility and marketing it to their members. And the broker is the one who's sort of facilitating that. So we see very high conversion rates on affinity programs of that nature, where it's almost kind of an embedded offering rather than being sort of cross-sold or upsold into an existing book of P&C clients. So that's been where we've seen some really
well, because, for example, particularly the UK solicitors, for example, because they get fantastically wide coverage, they get exactly the coverage that they need, and it includes things that you'd be surprised that you can get included. If they were trying to buy standalone insurance, they would find it much harder.
Exactly. So I think those custom programs and that verticalization of insurance, where a technology company like us, we want to buy insurance which is relevant to us and the risks involved in our business, which might be tech E&O, it might be cyber, it might be PI.
Yeah. As you know, it's only when you start to try and buy those covers, you realise how hard it is.
Yeah, it's challenging.
There aren't that many easy channels by which you can buy that cover.
Yeah, exactly. And another example is we recently went into production with a client who specialises in providing insurance to the rural communities, so farms and estates. So if they were buying those policies individually in the open market, they might be buying property insurance on their various buildings. They might be buying livestock insurance for their animal. They might be buying life insurance or business interruption for some of the businesses operating on their premises. But Recorder has enabled them to deploy technology to automate a lot of the information gathering and rating of those various risks so that they can package up a product which is custom fit for a farmer or a farmer who's operating businesses on their premises. So it's really interesting, the use of technology to combine different classes of business into a multi-line product, where that can go. Because I think brokers who want to win should lean into their niche and think about, how do I best serve the needs of my customer? And that might be actually bundling different products together, because actually insurers want multi-line because it helps them to diversify their risk. Then it's just a case of coming down to London and finding the capacity that's going to support you with that type of endeavor, and then having the confidence that Recorder will help you execute that vision and build that bespoke cover for whatever community of customers you have, whether it's media agencies or publishers like yourself, Mark.
So you're not going to end up, you're not going to end up with a horrible cat's cradle of nasty admin to have to, trying to pass out 20 different small coverages and place them with different people. These days, you could probably even optimize that.
Exactly.
You can say, someone will do the agricultural machinery, someone will do the buildings, someone will do the other risk, I know, pollution risk, or the fertilizer that's in your barn that could leak into the local river or something, and someone else will do the livestock. But actually, I could present that as a united front, as a single package to that actual farmer.
Exactly.
So they have to sign one check.
Exactly. And as much as they enjoy the conversation with you around the farmer's table, they don't want to have it 15 times for 15 products. They want to have it once every year and talk about what's changed and what new risks they might have involved in their business. So I think that verticalization trend is going to be something which we see continue within commercial lines, which I think can now be realized through the use of technology like Recorder.
When you get more volume, we've already had the AI use case around helping with production and around renewals, making it really easy, improving customer service effectively. What other use cases have you found? And can you think of a time in the future as you get more scale where you could start to analyze that book, for example, analyze that throughput in an aggregate way, for example?
Yeah, 100%. Like one of the things that we just discussed in a product strategy meeting is this concept of placement intelligence. So because we're capturing all this data in a structured format, we can start to see trends about what certain profiles of customers are behaving and what they're buying and where that business is being placed. And that intelligence can be replayed back to the placement directors or the broking directors at our clients to help them to optimize their business. So I think that works at scale, and AI can definitely be helpful in that kind of stuff, only if you have structured data. Like you can't have an AI strategy as an insurance broker unless you have a data strategy. And the data strategy should be everything is captured in a structured format right from the outset. So I think we're trying to help brokers to understand, like, you might be able to, get ChatGPT to do some useful stuff for you on a one-off basis. But if you want to use AI at scale, you need to sort your data out first. But also AI, I think, is good at doing the grunt work. To quote a phrase you used earlier, Mark, I think human beings are always going to be better at the decision-making and making judgments based on the complex circumstances within the market, with the softening market and different insurers' appetites and all of the things which make insurance a great industry where things are so fluid and things change so quickly. Get AI to do the grunt work, which is getting all that data in one place in a structured format, because it can help to inform some of those judgment calls, which I think human beings are always going to be best at making.
Do you think this is a sweet spot of the middle market, though? Do you think we will end up with a lot of agentic AI binding that business from the underwriter's perspective? Because the price is the price kind of thing. And the conversations are the conversations, but the price is the price. If you know what I mean, you're still going to need that human conversation where there's the interrogation of what do you really mean by this? And, what does this actually cover and what does it not cover? And what was your intention there? And all around all the grey areas where AI would be pretty terrible, I would have thought.
Yeah. The feedback we've had from carriers is that they would expect a 20% refer rate on API originated premium. So basically, if a Recorder broker is submitting risk data they've captured in Recorder to an insurer, 80% of them should come back with a quote instantly. The reality, I think, has been a little bit different. I think it's probably been closer to 70-30, maybe even a little bit worse in some cases. And I think obviously it depends on trade and different circumstances.
That's pretty good. That's instant. 70%, 60% instant is still
is
a
underwritten,
big win, right?
Is underwritten programmatically. And generally, where there's a referral, or say, hey, you need to resolve this, or we need a bit more information on this, if they're able to supply that data quickly, a quote will come back shortly afterwards. And the MGAs are really good at that stuff. So quickly resolving, if it's not quote first time, quickly getting to...
We've got a query, yeah. What was the value of the seed drill in that farm?
Right,
because that's actually quite important because people like nicking them or whatever it is,
Totally, yeah.
So we've been talking about the UK market, which is a pretty big fish to fry anyway. It's a big market. It's a very big
massive
market globally. But what about international? I mean, you're a SaaS.
Yeah.
Software as a service. Anyone could plug into your service from anywhere in the world, couldn't they?
Exactly.
Do you have international plans sort of in your back pocket?
I would be lying to you if I said that we had a blueprint for how we're going to expand into Europe and the US, because what we're focused on at this moment in time, being an 18-month-old business, is really nailing our home market. And with the UK market being so big, I mean, UK GI, 15 billion, the London market, 90 billion, there's plenty of market to go after. So we want to make sure that we are building something which is useful and valuable and significantly better than the incumbent solutions. But yes, these problems exist in other markets, but you have to think about things like localization, language. I think one of the things which we got wrong in our last business is we tried to expand internationally too quickly, fueled by VC cash. And we're still licking our wounds a little bit from that experience, because I think until you've nailed your home market, switching context and trying to attack new markets, you end up being stretched.
Some of these concepts don't even exist. I mean, I remember doing an interview with Jewel on their 25th anniversary down in Madrid, which is where Jewel had started. But actually, the MGA didn't even exist as a concept within Spanish insurance regulation.
Really? Wow.
It was weird. There was tied agents, there were brokers and insurers, but there's no concept of this underwriter who underwrites on behalf of that underwriting paper. It was very, very interesting.
And I think insurance agents in North America are very different from insurance brokers in the UK. They're much more traditional salespeople who can sell products on behalf of an insurer without having the same regulatory oversight that a UK broker has to do a fair market assessment. So I think it is different. And, Applied Systems has just pulled out of the UK, pulled out their core SaaS product from the UK market, which was, I think, a bit of a shock to a lot of people. But I think it was a US product that they were trying to push in the UK without maybe trying to localize it.
What about the productivity gains of using this? I mean, you've already mentioned that your target is hopefully 80% of everything will just come back instantly from a selection of underwriters that you've sent something to. And then maybe that actually in reality being 70 or 60. What does that compare to the old manual ways of doing things? I mean, what sort of gain is that?
Good question. I don't know if I have a strong answer for you here, but the conversations I've had with insurers is, look, if the premium is being automatically underwritten and sent back to Recorder without one of our underwriters being involved, our cost to serve that premium is lower. Now, will there be some negotiation that happens offline, maybe down at Leadenhall Market? Sure, we're not trying to replace any of that stuff. What we're trying to do is make the transmission of the risk information and receiving the quote, we're trying to make that part of the process easier. Currently, the way that's happening is prop form via email keyed into this system. So we're trying to take away all of that painful process. We're not trying to replace the thing which makes insurance brokers and underwriters liaising in person. That's an important part of the process, because that's where people build experience. That's where that human judgment comes into play, is when you're not leaving everything to machines. So I think, yes, look, it will definitely reduce the cost to serve premium for underwriters, as well as helping brokers to increase their income per producer.
What do you think that sort of total addressable market, what sort of percentage of business is going to be transacted in this way of this middle market?
Whenever we think about stuff, we try to think 5, 10 and 20 years out, because this is a long-term project. We're all in on this, and we know that it's probably going to be a multi-decade project in order to realize our vision. So in 20 years' time, are people going to be trading insurance risk by sending each other PDFs via email? I think the answer is no. So every other market, if you look at financial services, if you look at trading or banking, for an example, everything has moved to APIs now. And an API really, apart from being an annoying technology acronym, is just a way of two pieces of software talking to each other. So it's no different from you sending somebody an email with a PDF. You're just cutting out a load of work, because if somebody sends you a document in an unstructured format, you've got to key that information into your system. So an API is not some terrifying thing which is going to replace, it's replacing the dumb work, which nobody wants to do. So I think the smart, ambitious brokers should be embracing APIs, because there's a huge amount of cost saving that can be achieved if they're realized. But yeah, look, I think we wouldn't be doing this and investing all our time and energy into doing this if we didn't think that this was going to be the large majority of the market within 10 or 20 years.
Yeah, and when you're meeting someone for the first time and they say, well, of course, we've got this system or that system, there are other platforms out there. What's your final pitch to them to say, look, this is why you should come with us?
Yeah, so at the moment, we are trying to win and be really good at the front office automation.
Well, I suppose you can still use the other one for other things if you want to. I mean, it's not a problem.
Exactly. So asking a large or a mid-market broker to rip out their ledger and their back office system, one, it's not realistic. It's also a multi-year change project. So what we're trying to do is almost create a new category, which is this system of work, which is a piece of software that a producer, which is an account exec, an account handler, an underwriter, uses to help them to be more efficient with their time. If you're an MD and you're looking at the majority of your costs as an insurance broker, it's in salaries. And in order to get that cost, the return on capital from those people as high as possible, you've got to give them the best tools. What you'll also find is if you're trying to recruit young talent in a fiercely competitive marketplace, if you give them crap tools, then you're not going to be able to retain those staff because the best people want to work with the best tools. If you go to the best traders on the City of London or Wall Street, they're all using Bloomberg and these amazing tools that help them to get an edge. You're not going to be able to recruit people if you don't have the best tools. So we think that, what Recorder will end up being is this must-have tool for your frontline producers. And if you don't have it, then you're not going to be able to attract the best talent. And that's kind of where we want to get to. Obviously, we've got to realize that vision first. So it's not focusing on doing absolutely everything an insurance broker needs to do. So we may do the back office at some point, but we've decided that we're not going to focus on that. We're going to try and focus on making producers more efficient and helping producers to do their job better each day. And that's a big enough category. And it also means that they can use us alongside their existing back office system.
It's also more glamorous, because it has more focus. Because those returns are more tangible. Because if someone produced 10 million last year and now they're using your tool, they're producing 15.
Exactly.
They're not working much harder. They're just working smarter.
The business case should be easier to prove without this huge change project, which I think makes people nervous. Because
so by the time you see the light at the end of the tunnel, you're thinking, why did we do that? I can't even remember what we used to do before. Can I compare like with like? No, I can't.
Exactly. And the conversations that we've had with the top 10 brokers, unfortunately, we are at a point where we are starting to engage with some of those top 10 big US brokers. They don't want us to do the back office system. They've already got that stuff in place. They want help to automate some of the manual work in the front office. So that's what we're focusing on.
So obviously long term, you will get round to taking over the whole world eventually. But you kind of answered this earlier. If I ask you what sort of entrepreneur are you, but you said it was multi-decade, so it's slightly different from your previous project. It's not the sort of thing where you're going to really prove that concept, really get it embedded. You can see the traction. Everyone can see where it's going to go. It suddenly becomes a very attractive property for somebody to buy, and then you move on. Is that what you would do, or would you want to stick around and say, well, I'm Matt Hicks, I want to have my name above the door for a long time?
Look, things change. And at the moment, every single person at Recorder, including myself and my co-founders, we're individual contributors. So I'm going and working with insurers and brokers to sell to them and help bring them onto the platform. Dave is writing code every day. So none of us are just being managers or just being leaders yet. We're too small for that at the moment. But whether we're the right people to scale up Recorder over the next 20 years, you have to make that judgment call at the time. But at the moment, we're really enjoying it. It's really fun every day, solving really hard problems for clients. I think the most rewarding thing, now we're 18 months in, is seeing the tangible impact that implementing our solution has. And it has been dramatic in some cases. And the warm feedback we get from those clients, having worked through quite intense implementations in some cases, is really rewarding. So look, we're a product-led company. So we've got to build the best product we possibly can and work out how to outmaneuver our competitors. And there are many competitors who do similar things. The key is execution. So it's staying focused, it's listening to customers and just focusing on building the absolute best product we can, addressing that very specific problem I mentioned earlier, which is making producers at insurance brokers more effective, basically. So no plans to sell. We're enjoying it. We're just trying to build the best product we can, and it will be a big business if we achieve that.
No, if you can make producers make more money for themselves and for their broking houses, you will win lots of friends, and no one's going to want to be without Recorder, are they?
Exactly. We're still in R&D mode, and I think we will be in R&D mode for a long period of time, and we will continue to invest in R&D. So the next cool, shiny thing doesn't come and outcompete us. But we're in the fun part at the moment. We're a small group of people. We've hired a lot of the key technical staff from our last company to join us at this company because there's strong, cohesive culture and chemistry amongst that R&D team. And I think that's helping us to really get that magic of a company at our stage where you're building things really quickly that are really valuable to customers.
What about call to action to anyone who's listening? What do you want them to do? If they're a broker, if they're an underwriter, do you want to get in touch with you?
Yeah, absolutely. I mean, if any of the things that you and I have talked about today, Mark, have resonated with the audience, we are available to provide demos. We're going to be doing a number of different events over the next couple of months. And, we offer free trials of our software as well, because we let our product do the talking. So if you want to try the system out before you talk about licensing it, you're very welcome to do that.
Oh, that's really handy. So it's because you don't have to make any kind of commitment.
Yeah, exactly. Normally we'll do, a couple of months to enable people to get a feeling for how the system works. Normally we'll give access to a couple of people so that they can run a case manually and run a case through Recorder, and they can measure for themselves where the efficiencies are rather than, listening to me saying how great it is. The proof's got to be in the pudding.
Excellent. Well, obviously all the contacts are going to be at the bottom of the notes accompanying the podcast, but I think it only remains for me to thank you so much for coming on the show, and I wish you all the best. It sounds really, really good. And yes, and I think if you achieve those aims, it's going to be a sort of thing that sells itself.
Yeah. Thank you so much, Mark. I really appreciate you having me on.
Thank you. Well, I hope you enjoyed today's episode. If you did, don't forget to subscribe or leave a like or a review or recommendation on whatever podcast platform you used to access this program. These really help get the word out. Before we go, just a quick reminder that advertising slots are available here and in other places in the Voice of Insurance podcasts. Podcasting is the fastest growing medium and attracts a high quality audience of key decision makers. It's also an intimate medium where you, the listener, are right in the room with me and the interview subjects. Needless to say, that means it's a great way of getting your message out directly to an audience because you know you've got their full attention. It's also very cost effective. So get in touch with Mark at thevoiceofinsurance.com to find out how you could be speaking directly to the industry. Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.